Hello, everyone. My name is Wendong Zhang. I am an associate professor of economics and an extension economist at Iowa State University. Today, I'm really happy to talk with you about Iowa land values. And we are actually talking about the hot off the press results from the 2021 survey we just released December 14th. And the key question we are looking at is we have seen tremendous growth in Iowa farmland values, and many of you have been looking at the news now, and we will be talking about the current results, but also looking at the projection for the near future and 5 years from now as well. So before we move on to the contents, I want to give you a brief introduction about who I am. So I joined ISU in 2015 after getting my PhD from Ohio State. I have been working here since then, mainly leading the Iowa Land Value Survey. I'll be doing another survey related to agriculture, is the 2022 Iowa Farmland Ownership and Tenure Survey that is started, actually mandated by Iowa legislature to be done every 5 years. That results probably won't be released until spring 2023. I also have recently completed a survey, just released a report sponsored by Iowa DNR. It's called the 2019 Iowa Lakes Survey. From this survey, you can find where Iowans are going for lake-based recreations. And just in case you're wondering, Clear Lake is the #1 most visited lake in 2019. And you can find more information about this as well on this CARD website, so Center for Agricultural Rural Development. I'm also doing work related to Chinese agriculture, which has a lot of things to do with the commodity prices, farm income, and the land values we are seeing as well. So you can also see mine and my colleagues Dermot Hayes' analysis about the critical issues related to trade and African swine fever and other things there. So I got promoted earlier this year, so you're stuck with me for a while. So today we're going to talk about the 2021 Land Value Survey, which is the first of its kind in the nation. It actually was started in 1941 by Dr. William Murray, who is more remembered now as the founder of the Living History Farm in the Des Moines area, if you don't know. And so this is just to make sure that you understand this correctly. This is similar to many other surveys conducted by land-grant university Federal Reserves, and including Realtor Land Institute. This is the expert opinion survey, so this is not a summary of actual transaction prices. They are informed by that. So our survey respondents are mainly ag lenders and farm managers, appraisers, brokers, and county assessors who are knowledgeable about your local land values. So this is, I'm proud to say, this is the only survey now providing a consistent annual estimates for land values for all the 99 counties in Iowa. And we have been doing this since 1950. And so if you're interpreting the results, I encourage you to pay more attention to the percentage change rather than the dollar per acre values, and also understand that percentage change is indicative of general market movements as opposed to how a particular parcel in your county should be selling for. Okay, so who are the respondents? They are essentially, we have 455 respondents and provided responses for 650 responses. So essentially that they receive a survey questionnaire both online and through mail, and they have the option to provide land value estimates for their primary or additional counties. 70% of people only provided land value estimates for one county. There are some folks provided up to 12 counties, and we really appreciate these responses. And in terms of occupations, ag lenders and farmland brokers and realtors and farm managers and appraisers are the dominant category who provided responses. And so we really appreciate their responses, and these are the people who make us be able to announce and show results at a county level basis. So what is the key number? The key number is we have seen a 29%, 29.0% growth over the 12 months. Okay, so when you are looking at the Iowa farmland values, the average Iowa farmland values now stands at $97.51 per acre as of November 1st, 2021. So that represents a 29% growth since November 2020 to November 2021. So this is really, really significant, and I will show you how this compares with previous dollar amounts and also how this compares with the previous percentage increases. But before I do that, I want to also show you how that pans out with the different land quality as well. So we are seeing higher quality land are now posting closer to $12,000 per acre, up slightly more than the medium and low quality. So the high quality land actually increased 30.5% growth, while the medium and low quality increased also very strong, but it's slightly lower, 26 to 27%. One thing to note about is this survey, we call it Farmland Value Survey. It's not just cropland. So especially when you're looking at low quality land, this could include pasture, timber, and land with recreational potentials. And when you are thinking about how to interpret farmland, this is also can be comparable to the USDA surveys of agricultural real estate, which means that the farmland includes the value of land and buildings on it, although the land itself accounts for the vast majority of the value for the farmland. So how do we understand the 29% growth? Here is one way to look at it, and this chart shows you land values in Iowa, average farmland values in Iowa since 1941. And the blue line shows you the nominal value that you see in the annual survey announced like this year. And the red one shows you the inflation adjusted values, essentially takes the effects of the inflation out, recognizing that $1 today is worth more than $1 tomorrow. And especially true nowadays with we are actually experiencing the highest inflation since 1980s. If you're thinking about the nominal values, with the 29% increase, we're posting historical highs. And this is the highest since we recorded land values in 1941. And that essentially is even 12% higher than the previous peak in 2013. So that you see the sharp uptick in the end in the blue curve. You also see an increase in the red curve, but it's not as dramatic as we've seen in the nominal values. So the inflation adjusted value only increased 21%. So the gap shows you the effects of the inflation. So if you are thinking about the inflation adjusted values, they are still slightly lower than the 2012 and 2013 values. However, another way of looking at this is really significant is if you're looking at the percentage changes in these charts, they're showing you the percentage change since the 1940s. Essentially, when you are seeing a blue bar pointing upwards, that means that land values in Iowa show an increase in that year compared to the year ago levels. And so you see the sharp uptick into the very end on the right. That's a near 30% increase we've seen over the past 12 months. If you want to find another increase like that, you need to go back to 2011 or go to the 1970s. Right? So this is really, really phenomenal because we have been seeing modest declines falling off the peak of the 2013, and then the land markets has been stagnant for about 4 to 5 years. And then with a bunch of factors, later I will elaborate more on strong government payments and much higher commodity prices, incredibly low interest rate essentially pushed what we've seen in the recent surge in the land markets as well. So with this surge, and especially the analogous of a rise similar to the 1970s, there are more respondents, especially those who have experienced the 1980 farm crisis, start to worry about whether we are seeing this cycle going through again. And I will provide some more discussion on that, especially now the rising inflation also gives people a lot of the pause on the sustainability of the future growth. So far the indicator seems to show that we're still okay, but I will show you later on that the land value are indeed very sensitive to the interest rate rise, and we are likely to see that probably in a coming year, if not immediately. Okay. So before I talk about the specific factors, here is a very large table that shows you how land value increases vary by district and quality. So in previous years, I would have to stare at this table for a long time to figure out what is really different. And this time, they're quite consistent. So overall, we're seeing across all 9 crop reporting districts, they are showing a fairly strong and consistent growth in land values, over 20% for all districts. And the only differences are that the higher quality grounds in general, in almost all quality, show slightly higher growth, as we mentioned before. That reflected that in the auctions, for example, there are more competitive bidding for these grounds. And when you are looking at the crop reporting districts, that North Central Iowa, Northeast, West Central, Northwest, and also Southwest, the East Central are showing stronger growth than other districts slightly. So this is in part related to the concentration of crop production as well, because we are seeing stronger than expected crop yields. At the same time that when you're looking at districts like Northeast and Northwest, there are also a significant presence, even in North Central, significant presence of livestock producers, which they have economic reasons to bid for higher for nearby acres for management of the manure. But also, this is also related to when you are looking at these areas, especially if those areas have development potential, either for urban development or wind turbines, that could also elevate the competition for the land parcels as well. So when you are thinking about how to interpret the land values, I also want to remind you that the high, medium, low land here are localized indicators. So when you are thinking about high quality land in South Central Iowa, for example, the self-reported average CSR2 would be only at slightly over 72. And when you are thinking about what is the medium quality CSR2 for Northwest and North Central Iowa, they're even higher than the high quality land in South Central Iowa in terms of the corn suitability rating too. So in that way, I'm saying that it's when you are looking at either the pure indicator of land quality or the dollar per CSR2, these will be locally varying by crop reporting districts. So when you are talking about higher quality land, you should really be thinking about this is a high quality land in your local area. So another thing to think about this is the implication of the near 30% increase in the land values have disproportionately impacts on owners versus tenants. So this shows you 2 charts. On the left, it shows you the weighted average CSR2 by county. And if you see a lighter color, that means that they are on average having higher CSR2. So those are the Des Moines lobe area, if you are familiar with the soil association. And on the right, it shows you the percent of the land that is rented out according to the 2017 U.S. Ag Census. And you can see that there are counties in the north central Iowa in the high CSR2 area in the Des Moines lobe are rented out a lot more. So the highest in Iowa actually are 82% of the land are rented out, where in the south central there are less. Some counties are seeing less than 30% are rented out, meaning that if you're in the north central Iowa and a lot of the land that you operate are rented from others, and the 30% increase in land values potentially could mean that in addition to facing higher fertilizer prices, higher fuel costs, and potentially challenges in getting the machinery parts for your tractor, you are likely to see an increase in cash rent that you will have to pay in March if you haven't already negotiated. So, which cause potentially disproportionately higher increase in the production costs for those who rely on the rented acre than others. I think it's important to think about how this not only impacts farmland owners, but also how this impacts producers who rely on rented acres, and also thinking about how this affects the ability of the beginning farmers and people who wanting to get into agriculture with the much higher prices, how this affects their ability to access farmland. And I will show you later on that when you are thinking about the share of the land bought by new farmers, is still very, very low. It's at 3% of all the purchases. So I want to spend quite a bit of time to talk about what is really causing the surge in the Iowa farmland market. The respondents are asked to choose among, write down what they think are driving these market surges. And you can see these 7 top reasons that is selected. So many people cited higher commodity prices as the factor that is pushing up land values. So I mentioned before, if you're thinking about the land markets, it's roughly land value can be interpreted as land value equals income divided by interest rate. So commodity prices are significantly higher, and that definitely push up the income. So how much they have been rising? This is a figure that I clipped from the Chicago Fed survey from this November. And when you are looking at corn prices, this is at least 40% higher than 2 years ago levels and 60% than a year ago levels. And this is not just corn, but also soybean and even livestock prices as well. So remember that if you think about yourself 12 months ago or 18 months ago, everyone is still only thinking about maybe we might be getting high $3 for the corn prices and hoping for maybe down a few years we'll get maybe low 4s. Now we are seeing the mid 5s, right? So $5 corn. Nobody is thinking about $3 corns now, and so the commodity prices are significantly higher, and so are the soybean prices. If you just account for these price changes alone, that will means that we will receive at least $4 billion more of higher payments if everybody sowed even at market prices without doing any of the pre-harvest strategy to get potentially higher prices, right? So that's where this chart is also showing on the right, is showing you this is when USDA is looking at the U.S. farm income, a lot of the increases are showing in the first green bar, and that is pointing upwards, meaning that those are the farm income increases due to price changes. So the prices are improving significantly, so those are reflecting in higher commodity prices that we are seeing, but also translate into the income and cash the farmers receive as well. So another factor related to this is the third one. So the strong yields, right? So about early in the season, we have experienced some production challenges, especially weather challenges, and but in the end, the rain came in the right time in the end, and we got stronger than expected crop yields. And so when you are looking at the production size, we are actually pretty decent crops this year, and that on top of the commodity prices, we're seeing the production increase as well. So that helps with the income that generated by these stronger crops as well. So when you are thinking about the commodity prices and the quantity increase, which is the stronger yields, you are seeing the uptick of the net farm income showing on the left here, reported by USDA. So essentially, we're seeing a significant increase, continued increase in U.S. farm income. And unlike 2020, which a lot of the growth were driven by COVID-related payments, and this time that we are actually seeing a real increase because of the higher commodity prices. So that's part of the reason. Recall that the formula, land value equals income divided by interest rate. So the income is substantially higher because we are seeing higher commodity prices. The income is also higher because the last two columns, what we are seeing is we are still getting significant government payments. So to give you more details, on the left it shows you the government payments over the past 5 years. So if you're looking at 2017, that's a regular year. On average, we are seeing probably $10 billion of government payments to all U.S. producers in general. So those includes the commodity payments that you are getting from ARC-CO, PLC, across all commodities. And also the beige color is essentially the one that is in the form of conservation payments, EQIP, CRP. So in general, we are seeing $4 billion of conservation payments that is consistent throughout. There are some commodity payments that is varying by price or revenue, but in general, we are getting maybe another $5-6 billion after that. So what we have seen over the past 4 years is there are significant surge in the ad hoc payments. So first, those are the payments that shows up in 2018, 2019. Those green color, the teal color are the MFP payments, Market Facilitation Programs. So these are the trade aid payments in order to combat and mitigate the impacts of the tariffs imposed by China in response to the U.S.-China trade war. And the orange and the brown color are the COVID payments that you can see how substantial they are in 2020. And those essentially led to a record government payments of $46 billion. And when you are thinking about the total net farm income in that year, we have seen an additional ad hoc government payments of over $36 billion. That's even higher than the farm income growth in that year as well. So in 2020, at least we are seeing that farm income is higher, but it's not necessarily driven by much higher commodity prices. This year, we are still seeing at least $16 billion more government payments, but at the same time, we are seeing probably more fundamental changes into the commodity prices. So that's one of the things. But overall, it takes time for these government payments to be fully absorbed in the land markets. So once you get the payments in 2020, then you can go out and bid in the land auctions in 2021 as well. So those are reflected there to give you some general idea of how this manifested. The market facilitation program essentially will give Iowa farmers roughly $1 to $2 billion more in terms of the government payments, and the COVID payments in the form of CFAP, Coronavirus Food Assistance Program, or the PPP, Paycheck Protection Program. So these alone will give another maybe $4 billion to Iowa farmers. So on top of that, you have the commodity price increase. I mentioned there probably will be $4 billion due to the higher commodity prices, and maybe another $1 billion due to the stronger than expected yields. So if you sum things up, over the past 3 years, we have seen probably $10 billion, mainly in the form of ad hoc federal government payments injected into the Iowa agricultural economy. Even though they are temporary, they showed up eventually in the land market, because when you are thinking about what farmers like to buy when they have more money and they want to buy land, right? So that's part of the story. And so that's one of the things that is, again, land value equals income divided by interest rate. So income is higher because commodity prices are higher, but also we are seeing significant increase, even though lower government payments, but it's still higher than normal. So another thing I skipped is the second column is the favorable interest rate. In March 2020, the Federal Reserve dropped the interest rates substantially to near zero levels. And think about the formula again. Land value equals income divided by interest rate. And the interest rate, if lowered, will, in the denominator, will be pushing up the land prices. So when you are thinking about why that's happening, because low interest rate essentially means that you have a lower cost of financing, but also lower interest rate, meaning that if people are buying bonds, their returns are getting smaller. So that pushed some of the investors to think about what other assets I could buy. And real estate, including farmland values, are farmland is one of the candidate alternative investment options, right? So here are some of the more information about interest rate. On the right, it shows you a chart of two colors. The green line shows you how interest rates, the federal funds rate, have changed over time and since the 1950s. And if you're looking at the last 2 decades, we are seeing very, very low, historically low interest rate, even when we are looking at over the past 100 years. And now we are seeing maybe some modest increase in hikes in 2015, but it's dramatically decreased in 2020 in order to combat with uncertainty with COVID-19. And the red line shows you inflation. Inflation has been very, very high in the 1970s. And that's part of the reason why in the 1980s, the interest rates are raised to near 20% or even higher to deal with the inflation. Now we are seeing some worrying signs of the uptick in inflation to now. So we are seeing 6% inflation rate is probably the highest since 1982. And so there are a lot of concerns about whether we will see an increase in the interest rate. Again, think about the formula, income divided by interest rate. If we see a substantial increase in interest rate, that definitely put downward pressure on the farmland values as well. In general, we are not necessarily expecting a sharp rise as we see in the early 80s, but I will show you that the land value could be very sensitive to interest rate movements, especially now the Federal Reserve members are talking about their potential, at least open to raising interest rates if inflation continues to run high. So I will comment on that a little more. But here are some of the analysis. And again, this is the federal funds rates, the interest rates, showing you more up close to the last 5 years. It shows that we're at very low level in terms of interest rate, and then there's interest rate has been gradually increased by the Federal Reserve with incremental hikes. So you can see the little steps, and each step is about 25% basis points, meaning that you are increasing, say your current farmland loan rate is 4.5%. If the Federal Reserve increase one hike, 25 basis points, so it's 1/4%, then your interest rate of getting the 20-year mortgage loan rate could increase from 4.5% to maybe 4.8, 4.9. So we are seeing, my colleague and I, Chad Hart and I, have done research looking into what it means when you are seeing increase in interest rate. So on the right is a busy chart, but it does convey the message that in general, when you are thinking about the interest rate hikes, thinking about the brown color one pointing downwards, that means that for the interest rate hikes in 2018, Federal Reserve raised interest rates, and so the brown bars are pointing downwards, meaning this policy move will push down land values. And you see multiple bars also means that this move not only pushed down the 2019 and 2018 land values, but also pushed down the land values for the near future. Actually, it takes a decade for these one-time policy move to be fully absorbed in the market. So it takes, in other words, it has a very long tail. So one move now today will not only impact the values nowadays, but also affects the land values 10 years down the road as well. So that's essentially the message we're saying, that is essentially if we are seeing 25 basis points, that if you see the farmland loan rate increase from 4.5% to 4.9 or 5%, we could easily see an immediate reduction of 10-15% in farmland values compared to current values. And however, when you are thinking about the current monetary policy as a whole, you also see there are some bars pointing upwards. The teal one and the black one, that represents, the teal one especially represents the substantial reduction in interest rate in March 2020. So essentially, that drop in March 2020, recall that's when we first start to have lockdowns and shelter-in-place policies to deal with COVID-19. And so to worry about the recession in the US and globally, the Federal Reserve made the bold move to reduce the interest rate from the current value to near zero levels, right? So what it does is you see that interest rate reduction means that you have a lower denominator in the income divided by interest rate and push up the prices significantly along with the income growth. And that's why you're seeing the bar pointing upwards for the teal bar, and they also will be affecting the land values over the next decade. And if you pay attention to the size or the height of the bars, they're higher than the other things, meaning that this drastic move in March 2020 offset all the effects of previous hikes. So when you are looking at the net effects of all the policy movements over the past few years since 2015, we are currently in a net supporting environment where, because the March 2020 reduction is so dramatic, overall we are seeing the lower interest rate are pushing up land values. And when you are thinking about the future potential changes, even if they change the interest rate modestly, the net effects of the March 2020 reduction probably at least will be able to keep the current land values at high or slightly lower values, that we are not necessarily will see a collapse or dramatic reduction in the land value, because that the interest rates are very, very low and the Federal Reserve, if they're moving, the policy moves will likely to increase things incrementally. So there are some other things that mentioned that when you are thinking about who are buying farmland, in addition to the farmers getting more money, there are also slight uptick of investors buying Iowa farmland as well. The proportion of the land sold to investors increased from 22% last year to 25% this year. So still dominant by farmers. But one of the things that attracts them is that the high correlation between farmland returns with CPI and PPI, which is the indicator of the inflation. So there are 70% correlation between farmland returns with the inflation indicators, meaning that when inflation runs high, then the nominal value of what you see in real estate, both in terms of commercial and residential properties and farmland, that value tends to be higher as well. So that pushes the investor to go and think about whether they want to invest in the farmland value market as well. However, I mentioned that the land values are quite sensitive to interest rate. This is a chart that shows you two interest rates showing in red and green. So the constant maturity treasury rates for the 10-year rates, one of the benchmark interest rate, and the green one shows you the farmland loan rate. And so you can see that they're fairly low over the past few years, and they are overlapping with this blue curve, which is the rent to value ratio for farmland. So I took the ISU cash rent number divided by the farmland value according to my survey. I took out some of the ownership expenses. So I used 77% of the raw rent reported in the ISU survey. The main point of this is to show you that the interest rate and also the capitalization rate for the farmland returns track each other fairly closely. So in a way that I can use the interest rate as a proxy for the cap rate to figure out how much the income could be supporting the land market. Again, thinking about the land value equals income divided by interest rate, I want to use the interest rate, and I want to figure out if I'm getting cash rent of current value, current level. If I make changes in the interest rate in the denominator, how much of the implied economically supported capitalized value will I get? So essentially, I'm saying that if I'm getting $200 or $300 of cash rent, if the interest rate is low, for the same amount, $300 divided by 3%, if I use 2%, I get a higher supported land value. If I get a 3%, if I get a higher interest rate, then the implied capitalized value will be lower, right? So that's exactly what I did. If I do is I use the cash rent divided by the interest rate. I divided by, one is the farmland loan rate, I want it divided by the CMT rate. This is one of the ways to detect whether we're in a bubble. Then I compare with these red and green curve these are the capitalized hypothetical values with the actual value showing in blue, right? If you see a significant departure between these curves, which means that if the blue curve is substantially higher than the implied capitalized value, if the reported value now I see in the real world is higher than what income can support, then we are in a bubble. So currently we are seeing the supported value based on the current low interest rate are still above $10,000 per acre. In fact, if you're using the CMT rate, it's probably more than $15,000 per acre. However, if I increase the interest rate from 1.3% to maybe 2.3%, the supported land value will drop from $16,000 per acre to closer to current land values, which means that there are substantial changes if you see an increase in interest rate. Again, I mentioned if we see, say, a 0.5% increase in interest rate, you see the farmland loan rate rose from 4.5% to 5%, likely we'll immediately see 10% or more reduction in land values in general, right? So they are quite sensitive to interest rate, but they are still currently supported. Even if you increase interest rate we will likely see a reduction, but probably not the collapse as we see in the 1980 farm crisis. But this is definitely something to watch, and likely we'll see some increase in interest rate. So there are some downward pressure in the land values 12 months later and 18 months later. Right. So one of the other things that I'm saying that is we are not necessarily in an environment with substantial bubble is because currently the land market is not nearly as leveraged as in the residential housing market as in the 2007 to 2008, for example, or they're not as leveraged in the 1970s as we know it. So one of the reasons is 82% of the land in Iowa are fully paid for, and I will be doing this survey again next year. So when you are thinking about my colleague Christine Tigran and I have done analysis which compares with 1970s and 1980s farm crisis with the more current contemporary land market. In general, we see that the income growth from 2003 to 2013 and even last year are more driven by strong exports, ethanol. So there are real gains, not necessarily driven by inflation. And the financial sector in the agricultural sector is more regulated. So the banks are no longer lending you 85% of the market value. So they have much tighter regulation on how much collateral you will want and how much money they can lend you. So the land purchase are not nearly as leveraged, and the interest rate environment is still fairly low. And so, but I think the interest rate environment is worth watching to see how that pans out. But so far, the signal is saying that we are likely to see fairly modest increase in interest rate if we see that next year. One of the reasons is because that the Federal Reserve think at least part of the reason why we are seeing higher inflation now is temporary because of supply chain disruption of the tanks and the COVID-19 restrictions in other countries, which affected the flow of the commodities and raw materials, right? So what is also interesting from the survey is we are seeing many of the people are reporting more sales than a year ago. The blue line shows you the percent of the respondents reporting higher sales compared to 1 year ago. This has actually reached highest level since we recorded the data in the 1980s. I do want to comment on that we have been in the tight, below average land sales environment for quite some time. So even though that we are seeing higher sale activity levels, we are probably not seeing an oversupply of land parcels. There are actually more demand than the land we are seeing. So we're still seeing a limited land supply in general, especially if you're looking for nearby acres in particular. When you are thinking about what are some of the negative factors affecting land market, many people are concerned about the higher input cost. I mentioned that when it comes to seed, chemical, fuel, and fertilizers, and so a lot of those are substantially higher, and people are starting to getting concerned about whether the land price is too high and whether we are seeing a potential burst of the bubble. Based on what I commented on earlier, that is at least the current signs don't necessarily point to that, but I think there are some critical things to watch, especially that for interest rate and how inflation will play out. Many people are also concerned about politics and especially related to tax law changes, and that pushed for more sale activities this year as well. So I also want to comment on that our results are fairly consistent with other surveys. Realtor Land Institute reported a 27% increase from September 2020 to 2021. The Chicago Fed survey reported 28% increase from October to October of the past year. And more significantly, they reported a 10% increase from this July to October 2021. This shows the continuous growth and strength in the land market. So I think that we are still seeing high auction prices throughout Iowa and across the Midwest. So likely we are still seeing significant momentum in the land prices. I will show you some of the forecasts, the crowd wisdom of what the land value might be 1 year from now and 5 years from now. And this is not just in our neighboring states, but also we are seeing 18% and 16% growth in Nebraska, non-irrigated cropland values in western Missouri as well. So this is driven by especially the macro phenomena of higher commodity prices, government payments, and lower interest rate. So that is reflected here. I mentioned that this is low interest rate is also pushing up the other real estate residential homes as well. I looked at the Zillow Housing Prices Index for Iowa, for all the Iowa homes, that over the past year, they have risen 17% as well. So you can see that this is not just a farmland story. This is across the real estate class, and this has a lot to do with the monetary policy, with the CARES Act payments coming from the federal government as well. So you also see that in the headlines like this, in the record auction prices. So what is new is that when you are going to land auctions, many people are no longer surprised when they see a parcel selling for $16,000, $18,000, because it's no longer a rare thing to see, right? So I think that we're going to see some of this. I want to caution you that some of the sales at least have development potentials as well. So some of the parcels, for example, in the Grundy Center one has wind turbines, and there are some parcels that has development potentials as well. But again, I think the land market is still fairly strong. When you are looking at across the counties, 99 counties reported historically high record sales. Sale prices in terms of their nominal land values, and Scott County is still the highest, followed by a lot of the counties in northwest Iowa. The Decatur County is still the lowest, but their prices are substantially higher. In fact, that out of the 99 counties, and 20 counties highlighted in the red circle are showing historically high values, even in inflation-adjusted terms. So in other words, that these 20 counties shows a real historical highs. All the other 70 counties are showing their value are still slightly lower than the 2012 or 2013 values, but they're very, very close. So when you are thinking about the percentage changes across the board, they're seeing substantial changes with much stronger growth. As I mentioned, in north central Iowa, northeast Iowa, and west central, they're seeing slightly more higher growth, in part due to the bidding for parcels with recreational potentials, with people who, encouraged by the pandemic, they want to have more open space. And also that in the livestock important areas, that the bidding is more aggressive. So those are some of the things that reflected in a darker color in this map as well. I mentioned earlier that when you are thinking about who are buying farmland in Iowa, they're still dominated by existing local farmland owners and farmers, showing in the blue curve here. So the over 60 and 70% of the land are actually bought by existing local farmers. There's the red curve showing the investor share, and the investor includes retired farmer as well. So there is a slight uptick, especially compared to a few years ago, but that they are still the dominant, not the dominant category. The green line shows you the share that is bought by new farmers, and they're fairly low. right? And I think that the higher prices also affected their ability to get into the land market, especially considering the amount of the acres that they need to make a viable production, because you also have much higher equipment cost too. So who are selling the land is predominantly sold by estate sales, and there a slight uptick of 24% of the land are sold by retired farmers, encouraged by higher prices and also maybe worried about the potential tax law changes. And when you are thinking about the cash corn price and soybean prices predictions, and people are expecting $5 corn and slightly increase 5 years later, and $11 soybeans, and maybe slight increase 5 years later. What is also noticeable is when you're looking at the same forecast 2 years ago and even 1 year ago, nobody is expecting $5 corn. That's part of the optimistic views that we see in the commodity markets, in the land market, because the higher prices that people are encouraged by that, they are feeling very confident and optimistic about the future outlook. So you should take that into consideration as well. That's also reflected in the land value predictions. In the blue line that shows you the land value forecast for 12 months later, 80% of the respondents still forecasting a continuation of the growth in land markets in their local area, but nobody is expecting over 20% or 30% growth, so they expect the momentum will be slowing down a little, maybe grow 5 to 10% or maybe slightly over 10%. 5 years later, there are still 80% expecting growth, but if you look at the left part, that there are more people concerned about the potential declines for the reason that they worry about the changes in monetary policy, especially. And one of the other thing that is pointing to a potential weakness is when you are thinking about one of the key drivers of the commodity prices, the exports. The U.S. agricultural exports to China are fairly strong. The red line shows you the current exports, and the blue line shows you the exports to China last year, and the green line is 5-year average. So the soybean and the beef are still phenomenal, but the soybean price, the exports are 10-15% lower than last year. And the corn and pork exports are not as strong as last year, even though stronger than maybe historical average. One of the reasons is because that China completed the hog rebuilding efforts following the 2018 African swine fever, to which they lost 40% of the hog. And they have finished rebuilding that, and pork is so they finished that, so they no longer need as much of the corn they need, as they are having more pig in 2020, and now they don't necessarily have a pork shortage, so the imports are actually lower. In fact, that this week that China just announced the tariff on pork imports will increase from 8% to 12% in a way to discourage pork imports, because that China can produce 97% of the pork they need. So that could potentially hurt the momentum for the 12 months, especially 2 years from now, and that could put some downward pressure on the income growth and also reflected in the land values as well. However, when you are thinking about the immediate growth, we are seeing most people are still expecting a higher land values, at least a stable one. Only 3% across the nation are reporting they expect a lower farmland values in their local area. I did mention earlier that the 30% increase in land values does mean that we likely will see a significant increase in cash rent, likely at least 10% in my mind. We will see how that affects the profitability due to the higher cash rent and higher input cost. But however, I want to point out that the current production cost and the higher projected commodity prices still left a comfortable profit margin, but it's probably not as rosy as we've seen this year. Right. With that, I want to close and remind you that you can go to the CARD Farmland portal to find more information. You can download the data set, which contains county land values since the 1950s. You can see these interactive graphics. You can also read my narrative discussion about what is the factors driving these land market changes. And with any questions, feel free to get in touch with me. Before I close, I want to also draw your attention to the 2019 Iowa Lake Survey, where you can see how long people travel to go to these lakes and what people are doing. In the various lakes, for example, in this East Okoboji Lake, that people are enjoying boating a lot more than the state average, and water skiing. So you can find a wealth of information there. And you also have, if you're interested, you can also find a new report I wrote recently looking into what U.S. and China can do to collaborate and cooperate in the agricultural sector. And here is some of the information where, again, you can find more information about the land values and the Chinese agricultural work I'm doing at Extension and CARD. So with that, I will close, and happy holidays to everyone. And thanks for registering for Crops TV.